When Warren Buffett moves $33 billion, we better be listening. In today's video, I'm going to show you what he did. I'm going to explain it all in depth. We're going to look at the economy, each step, each stage, and I'm going to show you what you need to do about it, all here in this video. Stay tuned, beginning with the talk of recession. You are going to hear recession here and there every single day, and now markets are simply ignoring it altogether. They're tired of it, and I get it. I am too. What did Warren Buffett do though? Let's take a look. First things first, Warren Buffett may be bracing for a recession, and Michael Burry's latest big short is a good move. Well, quite frankly, he's lost a lot on that big move that he did make that I covered in a previous video. But let's talk about Warren Buffett for today. Berkshire Hathaway sold a net $8 billion of stocks and added to its cash pile in the second quarter. That's important. But hey, wait a second. I thought we were talking about $33 billion. Well, let me show you. You could see right here. The sprawling conglomerate has now disposed of a net $33 billion of stocks over the last 3 quarters, fueling a $38 billion increase in its stash of cash equivalents, and treasury bills during that time. So right here, you've got them doing less of the stock buybacks, which isn't a good sign as well, because that means they don't think the stock will go higher and they're unwilling to put more cash into that. So you've got them selling $33 billion of stock over the last little while. They're adding to the cash position, and they would rather have that few percent that they're going to get from holding treasuries rather than put it into a stock which may or may not grow from this point on. It's important to note the way that Warren Buffett works is very different from a lot of other investors. He's willing to take 10 years, 20 years for that investment to come through, where he can multiply the value. So if he puts in $1 million, he wants to get 2, 3, 4, 5 million, but doesn't need it tomorrow. He doesn't need to trade for capital appreciation immediately and take a big risk. He wants to know, where is this going to be in 10 years? And if there's some fluctuations along the way, okay, I'm willing to take it. In this case here, he's not willing to put more money into the stocks that many people have been, thrusting themselves into right now. That doesn't mean that he's selling all of his stocks. It just means that he's positioning for more difficulty and less value. He doesn't see the value there. And people were saying in 2020, he's old, he's done, he's finished, he doesn't know what he's talking about. And yet, in 2020, things started to change, and then, oh, by the way, he's a genius again. That's the way the investing world works. The point that we have to take from this is that he seems to be looking at less value coming through in the next year, and so that's why he's making these moves. Let me show you what's next. Here we can look at the data itself. This is the job openings, and you could see that this declined over the last little while, coming off a real high peak. And so that tells us finally things are coming back to normal in the job market. Okay, we have this total hires and quits, both coming back down, reverting to where they were before 2020. We want to see this. Okay, this is healthy. Stocks are not pricing in recession. We know that to be the case. And here is yet another chart showing that. I can show you 1,000. I've been looking at the indicators today, and things are really out of whack. When you look at it on the monthly basis, of course, we are in bullish control right now. On a weekly basis, it's bearish control. That might change by Friday. And on a daily basis, it's bullish control as well. The bulls are in charge right now here today. All right, I can break that down. I can do that. I do that with the mentorship group for everybody and actually dissect that. But of course, only a handful of people in there. So what I can show you, though, is that the regional Fed indicators, like the actual indicators that the Federal Reserve is going to use, show unequivocally recession, and yet the stock market is saying, no, No, I'm not dealing with that. So, I mean, that's just the way it goes, right? Dallas Fed manufacturing outlook production down. They're in a recession as well. So there's like 1,000 different indicators of recession. Okay? You could look at so many of them, but does that mean that that's going to affect your stock prices, that your employer is going to fire you? Not necessarily. Not necessarily. Let me talk about these couple quick points. You've got a net $33 billion in sales from Buffett, and that should be a warning sign. He sees something going on, okay? Recession indicators aren't off the charts, but markets don't care. And I think that's pretty clear. Middle class can't keep up, all right? And I'm going to show you some stuff here, some charts, some articles. Why will it get worse? Can you tell me that? Can you think about that? Well, I'm going to show you why that is in fact the case. I've got something I've been talking about it a little while here, and it's starting to get very serious. If you appreciate this information so far, hit that thumbs up button. It does support the channel. Investing over the long term can be extremely difficult. We have to cut through all the nonsense and get the right information. What I'm showing you here is Seeking Alpha. They're the sponsor of the day. I want to show you something. You're going to get the latest trending analysis. When a government or an industry is affected by some news, some information that comes out, some new regulation, there's going to be stocks that are affected by that. And in Seeking Alpha, you're able to get that information instantly. These changes have an immediate impact or could be over the long term. And if you're aware of it, you're going to be able to take advantage. You're going to see Seeking Alpha analyst ratings. You're going to see that compared to the Wall Street ones as well as the quant ratings. They give a whole breakdown. You're going to get a lot of information all at a glance. They also have another option, which is their Alpha Picks, which has actually outperformed the market significantly. As you can see right here, portfolio total return Alpha Picks 43%, S&P 500 16%. Okay, so that's for the Alpha Picks. They do an excellent job of what I'm saying to you here. When we look at the government and what the changes that they're making and the industries, you got to be on top of that. You got to understand it, and that's what Seeking Alpha does. You can receive the emails based on these things that you're interested in, whether it's ETFs. You can have it all set up for you so that you only get the information that you need. It was a $200 approximately, and I thought that was per month, and I thought it was reasonable. Then they said it was per year, so that was a big shocker for me. $50 off right now with a link in the description. I hope that you'll click that. I hope that you use it and get that free trial. Just check it out. Click that link. Rising gasoline prices hit inflation-weary Americans. Okay, it's not going to hit Jeff Bezos. Inflation is not going to hit Billy G. It's not going to hit all the rich. It's going to hit the middle class and, of course, those below. They are going to really feel it. And guess what? They already are. I'm seeing people that are making 200 grand a year that are suffering. Why? Because their housing costs have gone up so dramatically. Everything was fine couple of years ago, and now suddenly this thing is through the roof. And you might think, well, that was mismanagement of their spending and so on. Some cases, but not all. Okay, because for instance, if somebody has a mortgage in Canada, Australia, wherever, now 3 years pass, that mortgage has to be refinanced, renegotiated, and now their mortgage is now double. Whoa, this is a big difference. It's a big change, and people are suffering. But we're going to talk about what you as the individual can do. Isn't that good? Well, I want to show you that. I'll show you that at the end. Look at this. Countries are now in a more fragile environment. They've used a lot of their fiscal resources to deal with the 2020 situation. Then you have policy-driven forces, geoeconomic fragmentation, trade tensions, the decoupling between the West and China. So many different things have been adding here. And of course, you've got all of these inflationary pressures and so on. That's from the IMF. So they talk about the stuff I always do. I thought it was just interesting to come out and see it from the IMF, as they do. The reports, I would say, are generally on point. I don't like their group, but anyway, that's the IMF. Okay, so we have these things all adding up. Your job, though, is like your big corporations right now. They are actively engaging in trying to eliminate your jobs. If you don't think so, well, I mean, this video is part of the nonfiction section. Okay, it's not the fiction. We're in the nonfiction section. And while you might see some robots and you might hear about all this artificial intelligence, and most of it is not very good, let me tell you, when it comes to these labor jobs, factory workers, and so on, they are pushing hard. And when I'm talking about factory workers, I'm talking about, the fast food workers. It could be a chef. It could be anything where it's sort of monotonous. It's the same thing all the time. This is just one little video, if I can get it to play, but you could see for yourself. It's a forklift. It's moving itself around. You've probably seen these things before, something similar, and they're testing it. They're working on it. Yeah, it's going to take a little while. I get that. But the point is that these are the kind of things that will be implemented, that will displace jobs, that suddenly people are going to have to get a lot less picky about the positions that they are in. So learn the skills today, and we'll talk more about that later. Homeowner stress bursts into Canada's bank's mortgage data. So finally, it's coming out there. Of course, you've got rates over 7%. It's going to hurt. It's really going to hurt people. China's banks cut rates on mortgages and deposits in stimulus push. China is trying their best to stimulate, and I believe that this right now is going to be the beginning of the next stage of stimulus. And that's why things are about to get worse. You stayed into this point of the video, and of course you got the message. They are all going to go into the next level at some point in the near future. Could start with China. Other central banks, Chile, Brazil, and others have started to go and reverse course and decrease their interest rates, going in that route. And what does this mean? Well, of course, more inflation is the result. More inflation on top of everything that you are dealing with. There is more coming. So we have to prepare accordingly. Stick with me, okay? I'm going to talk about it. Student loans, I do quote this all the time, $400. So essentially what we're looking at right now, Barclays did a study and they basically said, okay, of all the debt, the student loan moratoriums are finishing September to October timeframe, and that means everybody's got to start paying them again. On average, I was quoting you $400. It is approximately $390. I just wanted to show you that. We can always say 400, round it up, but I wanted to give you the exact number because I do believe that getting you the information as detailed as possible is important. So look at that. You could see $400. Where are they getting this money from? They're already pushed to the limits. Interestingly, a lot of employers are starting to offer student loan repayment as a perk. Hey, come get hired here. We'll help you pay your student bills. That shows you that the circumstance is crazy. It's wild. Okay? Look at what's going on around you, though. You've got billions being spent, I don't know where, but let me tell you, this is just an article or out of on Twitter anyway, but it's just showing you what happened inside of the subway in New York. Things are falling apart. I think it was a 100-year-old water main or something, and you could see that it burst. The guy is standing knee deep inside the subway. It's everywhere, though. It's all over the place. You've got crime like this. San Francisco Nordstrom closes after nearly 3 decades in business amid a rise in crime. It's not just crime that's the problem. There's more. There's the economic aspect, but it stretches out further. What about Australia? Woolworths and Coles are saying that they have a material impact to their bottom line due to theft. So we've got this all together. You hear what I'm saying here? We've got recession. We've got the inflation that's taking hold. We've got people that have to pay back their student bills. All of these things piling on top. At the same time, you've got infrastructure falling apart. They've got to spend more money, right? If they want to fix it, they got to spend more money. But at the same time, you've got crime that has risen. Do you see all the points connecting? Do you see how this all comes together? These are the dots that I'm trying to connect for you. Yeah, it takes me 15 minutes to get there, but I'm trying to actually give you every piece of information you need to make the right decision for yourself. Okay. If you want to be able to do this regularly with me, all the information that you need is on Discord. If you want to join over 1,200 people every single day chatting back and forth, get on the Discord. Say hi when you come on in. There's going to be so much more stuff in there, I'm telling you, and I'm going to try to figure out how to do the giveaways and stuff. So you definitely want to get on there. Hit that link in the description, okay? And then the comment of the day, everybody's new favorite part of the episode, by the way. By the way, this is the 12th Seahorse. Says, I'm no financial expert, but when a company loses credibility, it loses credibility. Who's going to invest their hard-earned money in an underperformer? This was talking about Evergrande, and that's more than an underperformer. I mean, that thing is just slaughtered. And that's the truth. It's that nobody really feels confident, not just in Evergrande or Country Garden or a lot of these other companies. They're looking at it and they're saying, whoa. And that's part of what happened with the tech industry back in 2000, where, there was a lot of investors saying, I don't want to touch that tech stuff because it just blew up. And so we've got to be mindful, okay? We've got to be mindful. I think it's very important. Really quickly, what you've got to do, insider sales and major moves that go on, okay? You can find all of this information out. I have a video on my channel. If you go to my channel, you scroll down to the bottom, right there, you should see all the playlists. One of them is the Easy E-course, and you can go in there and see when Warren Buffett makes a move, when Michael Burry makes a move, all that stuff. I did it in, there's 2 different videos in there you could check out, okay? Be mindful of your time. Is there a dollar return on it? So sometimes you're just scrolling through Instagram, you're doing stuff that's nonsense, and these things need to be addressed. You can't spend that time. You got to realize that time needs to, maybe it's family time. That's different. Doesn't need to bring you a dollar value in that sense, but you've got to balance that out with time that brings you that cash in. It's very important, more now than ever before. We got to get serious with it. We're already late if we're starting today, but better late than never. We be comfortable with the uncomfortable, and that means potentially learning a new skill. That means, go on to Class Central if you want to learn about AI, robotics, automation. If you want to learn different types of skills, they've got them all on YouTube. You can, check my stuff out on the Discord. There's lots of stuff in there to get familiar with. You've got to adapt to the times. They're changing, but I know you can do it. If you want any help from me directly, just message me on Discord. Let's get talking on there. I'll see you soon. Take care.